You ever heard my Kermit impression? I have a Kermit impression.
I want to hear this.
Ready?
Yep.
Piggy. That's it.
That's
spectacular, isn't it? Piggy.
That's really bad.
Piggy. Why are there so many songs about rainbows?
Oh, jeez. I can't take it. I have nothing to say.
There it is. There's the I have nothing to say that I was waiting for.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situation, or needs. All participants in this podcast may have a financial interest in any or all of the products or securities mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objective, financial situations, and needs. If any private products are detailed on this website, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to episode 28 of The Money Path with Bob Iacchino and Mike Arnold, founders of Path Trading Partners. I'm your host, Stafford. Today's What and the Why segment is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with the conversations on the markets that's already in progress. Wait, is that a Pokemon in this room? Hold on. I'm going to catch him. Hold on.
I told the one person I know that's doing the Pokemon Go that Stafford reached level 5.
Yes.
And the text I got back was, I reached level 5 in the first day. Tell him he's a subpar Eknumon. She called you some Pokemon name.
Yeah, I am. I'm in it just to be hip with the kid. I was at Walgreens, and that was my checkout line. I was like, I caught 3 Pokemon in your store. Chatted up a very attractive lady.
It was very funny because she was like, oh, please, I got level 5 in the first day.
Can you actually catch them all?
You can't catch any of them. What are you talking about?
I don't know. I don't have...
They're not real.
They're not?
No.
Well...
They're not real.
You've burst my whole bubble.
Please.
You have.
Your negativity, you don't exist in it with a bubble.
I don't understand that.
So I saw this one, and this would not, this is probably way off topic, but there's this website called Twitch where people play video games, and they get tips. And there are a lot of, it's actually a very successful business operation, right? A lot of money's going through there. And I watched a Twitch episode of how somebody won a Pokemon video game, I guess for a Game Boy or something, with only one Pokemon and only Mega Punch. And all the Pokemon fans lost their mind because they thought it could never be done. So you don't need to catch any of that means. You only need to catch one and use Mega Punch. Okay? There you go.
I don't know what any of that means.
I don't know what a Mega Punch is.
The one thing I do know are there are 740 Pokemon. So
there's 740?
Yeah.
So you gotta, in order to catch them all, you gotta catch 740 Pokemon?
Yeah.
Well, no wonder their stock price is going up.
This, by the way, is one of the dumbest things. Like, I don't want to spend a ton of time on this, but it is.
We actually have to spend a ton of Pokemon with all the world events going on. Pokemon's the biggest one.
In a world where we have so much hurt, this comes at a right time to give us some release. Now, I have to tell you, if you are going to drive in Pokemon, I do have some top 10 tips. The first tip is turn off augmented reality. So when you see a Pokemon at 40 miles an hour, you can tap on him on the phone, and then you can throw your Pokeball to catch him, and it isn't using that camera feature, so he can be way out of range. Okay, so that is a pro tip for the adult Pokemon players who have automobiles.
I think if you're driving and playing Pokemon, that is a bad combination.
That's reducing my texting, so it's much better.
Have you seen the stock price? All right. We're talking about that. We can tie this into a learning thing, too. First of all, Bob, this might be for you. This is something you can talk intelligently about because the symbol is NTDOY, but it's an ADR. okay?
Mm-hmm.
Do you want to explain to our listeners what an ADR is?
Are you talking about the average daily range?
No. Then you don't. Come on. Come on.
No, the reason that I actually asked that is because I just wrote a what do you call it? A blog for Benzinga on behalf of Nadex. I shouldn't say on behalf of Nadex because we do a lot of things with Nadex, but I just wrote a blog on ADR, on the average daily range. So my mind is kind of on that right now, but
I'm talking about the American.
It's an American depository receipt.
Yes, that
That's what
ADR.
Mike is talking about. But we should also talk about the actual ADR someday.
Yeah.
Well, they're both ADRs, but we should talk about the average daily range someday. So an American depository receipt essentially is, remember they used to issue stock certificates? An ADR is a certificate that it's a U.S. bank owns a certain amount of foreign stock, and they give you a depository receipt, which sort of represents that same thing. So it's a way that you can own foreign stocks without having to actually have an account in those foreign countries.
Right, because they don't trade
Right.
Nintendo in America. They trade it in Japan, but
Right.
the way you can trade it sort of as a proxy is you trade the ADR.
Right.
Now, so I'm citing facts based off the ADR. The closing price on July 5th, which was the day before the launch of Pokemon Go in this country, in the USA. It hasn't launched worldwide yet. It's being rolled out over time, so this is not a global phenomenon yet. But based off the US, where else did it launch? Like Canada and some other places.
I don't know.
But so it was launched on the 6th. The closing price on the 5th was $17.50. You know where it's trading right now, Bob?
I don't.
$32.70.
Wow.
Let me get out my handy-dandy calculator. The percent increase from $17.50 to $32.70 is an 86.85% increase based off a release of a game.
I don't know. Yeah, I just don't know.
Is Nintendo back? I think this is a little overdone.
Yeah.
I mean, and since Nintendo licensed it, right? They didn't produce Pokemon Go. Another company programmed it. But they licensed it. So, I mean, this is a very interesting phenomenon. But, Pokemon Go is poised to surpass Twitter in daily active users. This is only because you can only track this on Android, not iOS. And it might have at this point because that was earlier in the week. The app briefly surpassed porn as the most popular search term on Google.
That's historic.
Yeah, that is historic. I mean, when people are searching for Pokemon Go more than porn, that's historic. Something. Let's see. Let me go through some facts, and we'll tie this in because we'll tie this back to Stafford, who's obviously got some thoughts. I haven't even downloaded it, but
I have not either.
The average daily Pokemon Go use is now 43 minutes. That was earlier this week. It could be up, but it's on pace to surpass Facebook, which averaged 50 minutes a day. The app attracted 21 million daily active users on Tuesday, the biggest U.S. audience for a mobile game ever. So those are some facts, although if you have downloaded this, you might want to know that it tracks, the app maker tracks a lot of stuff about you. It knows, of course, where you go because it tracks a GPS, when you went there, how you got there, how long you stayed, what else was there. The Pokemon Go privacy policy. Well, how do you pronounce this company? Niantic.
Niantic.
Niantic?
Niantic.
Right. They can collect your email address, your IP address, your web page you're on, use before you log the Pokemon Go, your username and your location. And if you're on a Google account for sign-in and use an iOS device, unless you specifically revoke it, they have access to your entire Google account, which they can read and write access to your email, Google Drive, Docs, and more. So that's just some interesting little tidbits, which I thought. So people, again, are signing away for privacy to play Pokemon Go. We'll get into some other facts about this, but what's your take on this? Because I don't have it on my phone, Bob. You don't have it on your phone, but Stafford, you're catching Pokemon.
Yeah, this has been my show research for the gaming sector. I see three things. Yes, this is good from Nintendo because everybody's been waiting for years to see if they're going to survive, and they knew they had to hit mobile, and it looks like they've hit a home run. So everybody's giving them thumbs up. Supposedly, their next game console is going to be the next revolution. I have opinions on that, but that's not for this podcast. So yes, it's a possibility. Nintendo's back, and this is the built-up anticipation for proof, right? Okay, that's why they hit $20 billion in market cap. More, right? Okay, so the game gets you out of the house, which is definitely important for, computer type people. You do have contact with other players. I'm not in that world, but as just a personal thing, it's very relaxing to see the map of my neighborhood and see how this forest preserve created this kind of character, and over here created this sort of character, and it is the true promise of what augmented reality should be. I feel like I'm connected to a world beyond me with this map that's real, and the game is giving me elements of entertainment that directly relate to nature and the environment. And that, if I'm going to go take a walk for 20 minutes, maybe I'll catch a Snuffleupagus. I don't know.
Here's my question, because this is not in my world. So people born in the 80s had stacks of Pokemon cards. It was a big deal in the 90s, right? And they were all little kids in the late 80s, early 90s. That's when Pokemon cards were a big deal. Some of the cool comments I heard about this game, and again, like, we would not have traded the ADRs. You would have never gotten in this podcast, we want you to buy the ADR Nintendos or the Nintendo ADRs. So that's why I don't want to spend too much time on it. But having said that, there was an article about people playing Pokemon Go and getting fit, right? You got all the Fitbit with the steps. This particular person that I know that's playing it very actively did 21,000 steps the first day. This is a person who spends most of the time on the couch. So I thought that was phenomenal. This person also said she lives in a neighborhood in Chicago, very, very hip, popular neighborhood called the West Loop. She said, I've seen parts of the West Loop I've never seen before. She goes, I found a church I didn't know was here. I found a really cool door to a building that I didn't know was here. I think that stuff is all very cool. I would never have thought to buy the stock on this. I honestly wouldn't. And that's dumb based on what Mike said. But they've surpassed Twitter and average daily users. I mean, that's dumb of me to not think to buy a stock. I've got to get out of this whole traditional idea that I have that a stock actually has to produce something that brings revenue.
Well, the gaming sector is a sector that I'm tuned into. Is a technology sector. So you have to see the gossip leading up to the innovations. 6 months ago, the CEO of Nintendo said, we are dying. We have to get on mobile and hit it hard and own it. And this is the result of that. So we were all waiting. There is a new trend in virtual reality, augmented reality, that has not even begun to start hitting in this traditional commercial sector. So I think there's a lot of upside paying attention to, the gaming industry, those technology companies, AMD, Nvidia, that are going to be bundling these chips into these future devices that are going to be in your home. The next Atari 2600 is going to be something you put on your head.
Wow.
Now, how about, I guess, because there's a lot of implications to this, because I heard there was a lure module where you can attract Pokemon for 30 minutes at a time to locations, and stores or restaurants are doing this. Have you heard about that?
Yeah, CNBC had an interview with a Brooklyn pizzeria owner who paid $10 for a lure and increased that week's sales by 75%. So if you think the average ticket in a pizza place in Brooklyn is probably $12, $13, right? And the average, well, you could just almost double that and say that his average ticket with the same flow or the same ticket with almost double the flow cost him $10. That's crazy. That's phenomenal.
I saw some pictures flying on the internet because businesses are doing this, but there are signs now going up on like restaurants and everything else that say, because I guess it's just attracting everybody who just go in there and they're loitering and everything else trying to catch the Pokemon. Now people are putting up signs on their stores saying, Pokemon are for paying customers only. I want to say that, though, it's great business model. That could be a great thing, luring people. But 4 teenagers in Missouri were arrested and charged after they were caught using augmented reality mobile game Pokemon to lure and then rob unsuspecting villains. So you have to be somewhat careful. You shouldn't wander down dark alleys at 2 a.m. trying to probably catch Pokemon. That might not be good. Another 21-year-old Michael Baker was searching for Pokemon around 1 a.m. when he came across someone he believed to be a fellow gamer. He asked the individual if he would like to battle. I guess you do battles in this thing, Stafford.
You got to go to a gym, I think. I joined a gym, the Mystic team. I have not walked over there yet. It's 2 blocks away.
The individual took the term battle a little too literally and stabbed the player. But
the other guy wasn't a Pokemon player.
Yes, but he took battle. So police confirmed that Baker had indeed reported the stabbing, but refused to be treated in order to continue his quest to be the very best and collect all the Pokemon in the surrounding area. So the guy's now stabbed and more worried about still collecting the Pokemon than about getting treated for his stab wound.
Listen, I think, honestly, is it true you have to go to a gym to battle?
I think so.
This person I know battled over a freeway bridge.
Well, these things can be all sorts of places where these gyms are and these places
that's something that the reason I asked that is that's a really smart thing where that's something that has to be addressed, right? These two stories, that we could pick isolated stories on anything, right? These two stories, there's been a bunch of them.
There are millions of players. They're just a couple stories.
Yeah, they're flooding the news with these stories where now that, like, they said that criminals were using the lures to rob people, like Mike said, and there were other criminals who were playing the game simply because they knew they would find people with a smartphone that they could rob at certain locations and steal a smartphone, right? So there's a danger to it in places like Chicago, for example, right? But this is incredible because if you have younger relatives like I do, nieces, where I want them to be a little older than 14 and 12 before they go walking around staring at their phone because they're going to get hit by cars and stuff. But getting gamers off their asses is a great, great thing.
Yeah, it's real. If you just sit at home with Pokemon open, like right now, I'm not catching anything.
It's phenomenal to get them up and walking around. If gamers are actually moving.
Can I catch Pokemon?
No. No, you can't. No.
Well, I'm walking.
No, you're not.
Not moving any. Oh, I am walking if I'm on a treadmill or running.
You're moving your legs. Does the definition, I got to look up the definition of walking. Does it mean you actually have to cover ground or is it just moving your legs?
Well, I don't know. This will be interesting to track, though, in the overall, because I think this is going to open up a huge new market segment with not just the augmented reality, but advertising and tying into these social media networks and games and using this the way you can attract people to your location with this. I mean, I don't think this is going to be the only. I think this is going to branch off into somewhat of a industry.
Yeah, enjoy this purity of version 1.0. I mean, this game is so pure and not commercially tainted. It is just a beautiful implementation of augmented reality. And I bet you that in a couple of years from now, a game like this is going to be filled with ads and buy this. And it's just,
A couple of years?
It'll be a couple
months. Or
like
next week.
They're on a 2-release a month schedule for this game. So, you know what? I'll give you 12 weeks. You got it.
All right. I just want to warn everybody else.
Hold on.
What am I?
Walking is move at a regular and fairly slow pace by lifting and setting down each foot in turn, never having both feet off the ground at once. So you do not have to cover ground to walk.
So I could, but
you would be walking on the treadmill, correct?
All right, there we go. I just want to warn people who are not playing Pokemon Go and getting out of their house, if you're just sitting there being a couch potato in this country, if you use someone else's Netflix or HBO Go password to watch streaming content, you're now a federal criminal.
So ridiculous.
A new ruling from the Ninth Circuit U.S. Court of Appeals effectively made sharing of your own password illegal. So if you're sharing password with somebody, and a lot of people do this, like they'll sign up with one account and then hey, use my account if you want to stream like HBO Go or Netflix, which the companies aren't that worried about. They don't seem, but that's illegal. You can't share your password. So you better go play Pokemon Go and not be on a couch potato watching with somebody else's password because you're a federal criminal now.
I so don't care about that law.
Just one. Okay, we should probably get back to some more.
I so don't care about that law.
I just thought that was fascinating.
Yeah, it's great. That they wasted our time with that law.
Well, there's a lot of laws that waste their time.
Yeah.
I'll have to see how they're going to,
100% true.
Wait till some more people get hurt playing Pokemon Go, and then our legislative branch will have to step in to probably make laws about that. Who knows? Well, markets. I think S&P and Dow made new highs.
Yeah. NASDAQ did not, right?
NASDAQ did not, but we actually, I think we think NASDAQ is going to approach their prior highs over the next month and a half. At least that's what I'm looking for.
Yeah, I mean, we kind of, I know I mentioned it last week, but we kind of called this. It's like if you've got this is what bothers me about this rally is that you've got a okay, so Alcoa came out this week, right? And Alcoa beat Wells Fargo matched. The earnings aren't horrible right now.
Oh, well, hold on.
Far.
Alcoa is one of the biggest financial engines.
That's okay.
Did you see that? No. Did you see their GAAP versus non-GAAP?
No, I didn't.
Okay. Hold on. Their GAAP, let's see. Alcoa's GAAP net income for the last 12-month period ending December 31st was a net loss of $506 million. When they added all back in their one-time charges incurred over the past 12 months, their net income on a non-GAAP basis went to $495 million positive. So
I know
it shifted by $1 billion between GAAP and non-GAAP accounting.
Listen, I know. Here's the thing, and I said this before I make this comment. Okay, I know, I agree. I feel you. Okay,
yeah, they're not the only company that does this, but it's getting to the point of absurd.
I feel you, but having said that, the stock's up almost 15%.
Oh yeah,
so it's like I feel you, and what I'm saying is, that was my clicky calculator that just fell. I said it on BNN. We had a BNN interview this week, which I think is up on our website. I don't know if it is, but if it isn't, it will be.
It's on the YouTube, yeah.
Okay, it's on the YouTube channel, the Path Trading Partners. Path Trading Partners YouTube, check it out. It's not our job. Like, this is what we use this podcast for, right? Is to say that is ridiculous. But having said that, the stock's up 15%.
Oh yeah,
so it's like
fight this whole. I actually find we're getting a huge discrepancy between what companies are doing, but even I don't trust this rally.
Right. I also said that.
Here's the deal. Everything is chasing U.S. dollar denominated yield, and we'll get more into that later in the podcast. This rally with new S&P highs, I don't think this is an investment rally. I definitely think it's a trading rally, which means, this can go on for a while and things can get even more and more insanely priced and leveraged, but it's because things are chasing yield. But at this point, only 15% of S&P 500 companies are at new 52-week highs. So,
what was that?
Huh?
What was that number again?
15%.
Yeah.
I mean, which either means a lot of companies have to catch up and make new highs, or this rally is done on a it's not broad-based yet. Now, it can go either way. And as long as people are chasing U.S. dollar-denominated yield in any way, shape, or form, this can go on for quite some time. Why I say it's not an investment rally is because I don't like a lot of valuations here, but it's definitely a tradable rally, meaning, look, this thing can keep going higher for a while. So you've got to.
I mean, are we getting 15% at 52-week highs? Yet the S&P, this is 500 stocks. Yet the S&P is at a new historical high. The depth of the rally, or the dearth, or whatever they call it, I never get that right, is I mean, it's ridiculous. It's like the with that few of a percentage of the S&P stocks at their 52-week high, like you said, Mike, if they catch up, how much freaking higher does the S&P go?
Yep.
You know, where you've essentially got another 470 stocks that have yet to reach their 52-week high.
That's where, I mean,
the percentage of the S&P that these 15% of the stocks must hold, it's like you almost just want to watch that 15%. It's crazy.
Well, you know, this is where I sort of feel like we're back, and I'll tie this into another couple anecdotes I got back in 1999, where people thought, a lot of people who were looking at valuations of internet stuff said, this can't go much higher, and still it went to double from there. You know, you don't know when this is going to end, and it never ends well. But I've now been asked by two people in the last week.
Big number.
Yeah, well, this ties into something.
I'm messing with you.
They asked me if I thought it was a good idea that they take their home equity line of credit, borrow that money since they can get a really, really low rate, and take that money and invest in the market because everything always goes up. They looked at what happened this winter. They bought more. They're fully invested now, all in stocks because bonds aren't anything. Look, every dip you get, and even the Brexit, look how fast it came back. So should they take home equity loan to buy more stock?
I don't know if that'll happen this time. So, okay, this is going to sound completely contrary to some of the things said in last week's podcast, but I don't know that Dodd-Frank allows that to happen anymore.
No, you can take your home equity loan, pull the money out, put it in a brokerage account, and buy stock with it.
Yeah, but it still depends. Your credit score has to be so much higher than it used to be.
Right, but
so there's just not going to be as many home equity loans out there to do that.
That's the mindset we're in. I wasn't saying that I don't think it's a good idea.
Is that risk on? Is that risk on from last episode? I'm actually learning what these things are called.
Well, that's people saying, you know what, things won't go down. And I said that I don't think that's a good idea. And they're like, well, I'm going to buy stocks that pay a good dividend that never go down. Like AT&T and Verizon, because I can collect the dividend that offsets what I'm paying for the money the money I pulled out, and then I just get all this capital appreciation because it just goes up.
Story time. So I want to say it was in 2005, maybe. I was having lunch at a place called One North on Wacker Drive in Chicago, and in walks this group of people. And I'm not going to say the guy's name, but this guy who was a principal of a brokerage and investment firm. I know him personally. He sees me at the bar having lunch. He comes over. He says hello. And he says, yeah, I've got these meetings with this guy. They're going to buy some principal guaranteed bonds through us. And I kind of smiled. I go, principal guaranteed? I said, how do you guys guarantee the principal on a bond? I said, are they government bonds? He goes, no. I said, because even those aren't technically guaranteed. They're backed by the full faith and credit of the U.S. government, but they're not guaranteed. How do you sell principal guaranteed notes? And he said, well, they're guaranteed by Lehman Brothers. I said, yeah. I said, so what happens? He goes, well, Lehman Brothers have to go out of business for them to lose their principal. So that's not going to happen. That was 2005. And I just find it so funny now in hindsight that it was specifically Lehman Brothers that was guaranteeing the principal on these bonds, because that guarantee was not a guarantee, obviously. And there's been multiple years of principal guaranteed bonds sold by Goldman Sachs and Morgan Stanley and Citibank and Travelers and all these other people right, have sold these particular products, and the principals have been paid back, except for the Lehman Brothers ones and the Bear Stearns ones. And it's so hard to get it through to people that this word never, which we got on some people about last week, this word never should never be used in investing. That's the only place never should be used, is in a never say never situation. It's insanity to me. Well, having said that, I think stocks go up, but still.
Yeah. Well, come on. Didn't we say we'd never have helicopter money?
I know. Yeah, I mean, I guess.
Well, have you heard all the talk about now? Japan's been talking about this, but that's actually, I think that's, let's see.
This is coming from academia, by the way.
Well, did you hear what is it? Mester, the president of the Federal Reserve Bank of Cleveland, and a member of the rate-setting FOMC committee signaled direct payments to households and businesses to stoke spending was an option if interest rates cuts and quantitative easing fail. Quote, we're always assessing tools that we could use. He was on an ABC AM program. In the U.S., we've done quantitative easing, and I think that's proven to be useful. So, quote, it's my view that helicopter money would be sort of the next step if we ever found ourselves in a situation where we wanted to be more accommodative. Can you tell people what helicopter money is?
Yeah, essentially it's checks. That's all. Essentially, the Federal Reserve prints money and gives it to you. Let's not make it complicated.
They just hand out checks.
They just hand out checks. That's what helicopter money is. It's the image of them dropping money from a helicopter and everybody just picks it up, which I wish they would have done that instead of the TARP.
Couldn't they tie that in with Pokemon Go if they were smart, though, where you catch a Pokemon, you get money?
Wouldn't that be fantastic?
So people are literally running around catching Pokemon and money shows up. Think about that. That's the way to do helicopter money.
Wow.
And, they've been talking about this, starting it in Japan. That's been did you see what happened to the yen this week?
I saw what happened to the yen this week.
Hold on. I mean, this was
sloppy double bottom there without enough of a move to classify it as a double
essentially
bottom.
Went from 100 to right now we're trading 106. I think this was the biggest, what is it? Biggest yen move since 99 in a week period. It's severely weakened, which is what they wanted, but they would talk in Japan all week was that they were going to start helicopter money. Yeah. Let's see. The Japanese yen is set to have the largest weekly drop in value since 1999 and is now sitting on a 3-week low against the U.S. dollar. There was a lot of talk about the helicopter money and them adopting it. I guess it's, though, prohibited by law to directly underwrite government debt in Japan, so they'd have to change the law to do that. But there's a lot of people who think that they're going to do helicopter money. At least they put it out there, and they had this huge, essentially, sell-off in the yen. So interesting. But this talk, which people thought years ago was absolute insanity of helicopter money, is actually becoming more and more prevalent of, yeah, we should do that. Yeah, it's an option. It's on the table at some point. If all our other stimulus keeps failing, it's out there now.
I'm sorry, if they would have bailed out consumers instead of banks and hedge funds and all that in 2009, we would be so much further along. I know that sounds political again. Here's something that I want an interesting thing. So some of the Fed governors are starting to come back out and say that we need to remove accommodation. Some of that Goldman said we need to remove accommodation, and then other guys like Mester, like Mike just mentioned, are talking about helicopter money. Right. And the interesting thing to me is the dollar index I feel very bullish about the dollar right now. So that's either a currency race to the bottom everywhere else with the dollar being stable, or a combination of advanced easing programs. The UK didn't cut rates like everybody thought they would, which was courageous but unexpected. And you got to wonder I'm saying that the Fed is out of play, but are they actually out of play?
Well, we'll see. The St. Louis Fed President James Bullard repeated his position that the U.S. economy will only be able to withstand one more interest rate hike over the next couple of years. There's really no rush. I think he was talking earlier this year. Dallas Fed President Robert Kaplan called for a patient and gradual approach to raising rates. Atlanta Fed President Dennis Lockhart said the FOMC needs to be cautious and patient. So pretty much they're stressing patience, and they're suggesting that interest rates will remain lower for longer. At least that was the theme this week.
It's crazy because, I said a few minutes earlier, this is coming from academia. There's an academic study that we're staring at, right? I shouldn't call it an academic study because I'm sure it's being studied, but that's the wrong term for it. But a faux academic study where you're looking at Japan essentially since the 90s, would we say? I mean, I think Plaza Accord was 1985. So figure 89 to 90, maybe 91 latest. You would say that this Japanese recession that they've never really come out of. So we're coming up on 27 years of it, 26 years of it. And for politicians and for central bankers and things like that, if you think about this sort of individual survivalist nature of the human being, I don't want to be the one to mess this up. I don't want to be the one to mess this up. If you're sitting there in the U.S. Federal Reserve or the FOMC meeting, you're saying, well, we can't hike rates yet because things are just still kind of shaky. Thinking that our crisis started in 2009, we're only 8 years into it, 7 years into it. We've got at least 18, 19 years before we get to where Japan is. I mean, it's just crazy. It's like this is the ultimate kicking the can down the road. It's the ultimate passing of the buck. But in the meantime, if stocks are going to go up, you kind of got to figure out your way to buy them and then convert that money into gold. I don't know. I don't know.
Well, let's touch base. Let's touch base on what's going on Britain and Europe. So, I mean, I think Cameron stepped down, right?
Yep. Cameron
and
stepped down.
Who's the new person in charge?
It's Margaret Thatcher. It's Margaret Thatcher.
Oh, I think she's gone. But this is the second woman prime minister now.
Yeah, her name's also Margaret Thatcher, I think.
No, it's not Margaret Thatcher. We're gonna get angry emails from if we have the England listeners.
The England listeners.
Yes, the English listeners. So I just butchered that one. So next, but
her name is Theresa May, leader of the Conservative Party. She's been a member of Parliament since 1997. Oh. Theresa Margaret Thatcher, I think, is her full name.
So so we have stuff moving forward, but is she going to move forward this Article 50 faster, slower? What's going on with that? Have you heard anything?
Yeah, I've heard slower. And I've also heard now that Brexit may never be implemented. That was a conversation I heard between a local hedge fund manager and his British employee / guy that is related to somebody in the royal family. This is conspiracy theory stuff. This is it's not confirmed. There's nothing to it. The amount of effort put in by the EU to keep Greece, which is essentially a $600 billion anchor around the neck of the EU. And they put every effort in to keep Greece, right? And they're just going to be punitively throw out their second strongest economy because of about a 2% victory for Brexit. So what the royal family, okay, now I'm saying it like it's fact, what this particular conversation that I was a part of where these guys said is that they're going to drag this on and drag this on and drag this on, and to the point where it never happens.
What are they going to try to keep Italy in?
Well, of course. Italy's not as bad as Greece.
The IMF warned of a global contango. How do you say that word?
Contango.
I can't say that word.
Contagion?
Contango.
From Italy's bank crisis, and they're forecasting a 2-decade-long recession. So they could, but
that's not going to happen.
Deutsche Bank's chief economist is calling for $150 billion bailout of the European banks. The European banks aren't doing so hot. We've touched on that many times. But I want to tie this back to your motherland, Bob. Did
Yes.
you hear this? Back to Italy. In this one town, I do not know how to say this name, so you volunteered to say everything Italian.
It's Bosco Trecase.
All right, they have a population of 11,000 people. Roughly half the municipal employees have been arrested for fraud.
Do you know why the other half weren't arrested?
They weren't. Why?
They turned evidence. They were guilty as well, but they turned informant.
So the mayor of this small town outside of Naples had to shut down most of the municipal offices after police arrested 23 of his staff. And so what these people were doing was the staff were filmed clocking in and out, then leaving to go about their personal business or using multiple swipe cards to register absent colleagues. Police video showed that one man trying to tamper with a security camera and then putting a cardboard box over his head to hide his identity before swiping 2 cards.
What's the mayor's name, Mike?
What's the mayor's name?
Yeah.
Oh, I don't know what the mayor's name is.
It's Pietro Caratenuto.
Okay, well, there we go. So
Pietro Caratenuto.
Your town. What's happening to your town?
He said he'll probably have to shut down the town hall because they can't. This is just so there's now. If this has any relation to the way Italy does banking, they're done.
And look, so there's stereotypes for all the different regions of Italy. I'm an immigrant, so I can comfortably talk about this. There's stereotypes for all the different regions of Italy. And the stereotype for the area of Naples is that they're thieves. That's literally the stereotype. Where I'm from, Calabria, specifically Cosenza, we're supposed to be stubborn, hard-headed. So like anytime you're stubborn about something, another Italian will go, you're Calabrese, that's why. So the regions have stereotypes, and they all believe it throughout the continent, throughout the country. They believe in these stereotypes. The stereotype of Naples is that they're all thieves. Like if you're in another region of Italy and, you try to accidentally walk out of a restaurant without paying the check, the owner will go, hey, get back in here, Napolitan, which means you're from Naples, right? It's a big joke. There's a joke my dad used to tell all the time. He said there were 3 guys in a plane, right? There was a guy from Paris, a guy from London, and a guy from Naples. And they were all talking about their towns. And the one guy put his hand out the window, and he said, we just flew over London. The guy said, how do you know? He goes, we flew over, my hand touched Big Ben. Then the French guy put his hand out the window and said, we just flew over Paris. So how do you know? Well, we flew by and my hand touched the top of the Eiffel Tower. And the guy from Naples said, we just flew over Naples. How do you know? Because I put my hand out the window. They stole my watch.
How do you put your hand out the window on an airplane?
It's a joke, dude. Oh. You can't touch Big Ben either.
Well, oh.
All those different towns must have rare Pokemon in them because Pokemon generate
no, but if you go to play Pokemon Go in Naples, your Pokemon are getting stolen is what I just learned.
All right, we're getting on the verge of racist.
You brought it up.
And Italian lives matter. Italian thieves matter.
Oh, no. Now we're going to go the emails that are going to come in.
Oh, it'll be fine.
Speaking of Italian food, how did you participate in Amazon Prime Day?
How does that, speaking of Italian food?
You can order stuff you can order pasta to have it delivered like really quick.
Here's the fight. You want to know the truth is I did not participate in Amazon Prime Day, but I did purchase things from Walmart online because the shipping was free, based solely on Amazon Prime. Amazon Prime Day, Walmart came out with free shipping during Amazon Prime Day and Amazon Prime Week, really. So I ordered some stuff from Walmart that we normally get because the shipping was free.
Dude, I heard that Amazon Prime was a huge success. I don't know.
When was Amazon Prime Day?
It was Tuesday.
Tuesday?
The 12th. It was 12th. Christmas in July.
Yeah.
Redubbed Christmas in July.
Tuesday the 12th. So what did the stock do on the 12th?
What did the stock do on the 12th? I have it on the 12th. Well, let's see.
On the 12th?
Well, let's see on the 11th. Let's look at the
12th. The stock was down.
It's been down since Prime Day.
Yeah.
On the 11th, the day before Prime Day, the close is 753.78. Now we're trading all the way down to 736.62. What percent decrease is that?
Another teaching. Hang on.
Hold on. Then you can have our teaching moment.
Give me the numbers again.
Oh, why'd you make me repeat myself?
You heard me drop my clicky calculator.
Oh.
Where were we?
748.21 on the on the 11th we were at 753.78, 753.78.
Yeah.
Now we're at 736.32.
That is, wow, that is a 23% drop.
23?
No, 2.3.
Yeah, I was going to say.
I work with numbers all day. You guys.
Amazon got crushed.
It's a 2.3% drop. Here's the teaching moment: is that things like this, you see it in Apple stock all the time, and which is why part of the thing that we do is we do price action only. You see things leading up to Apple. You see rallies leading up to Apple announcements, and then a sell-off afterwards. You saw the stock rally leading up to Prime Day. The low was on the 27th of June, the low of Amazon, and that low was $682.11.5 was the low, going by decimals. And it rallied up essentially for about the next 10 to 12 days into Amazon Prime Day, and it's sold off since. That is the explanation of buy the rumor, sell the fact. That's an old market cliche, buy the rumor, sell the fact. You buy into an announcement, and then people sell it off when the actual announcement is made.
Very, very good teaching moment.
Yeah.
Since we're on stocks, let's just keep going. Did you see, according to Wall Street Journal, Disney just locked in the lowest long-term borrowing cost of any U.S. company in history? They issued a 10-year bond with a 1.85% coupon and a 30-year bond with a 3% coupon.
I didn't see that, but I did see that Germany issued their first note that actually had a negative coupon attached to it.
Yep.
People may not know this. Actually, we should talk about this real quick, Mike, is that the coupon on the bond is what the company agrees to pay, but then those bonds are traded on a secondary market, just like stocks are. So if you are buying a bond that has a $500 principal with $5 worth of interest, forget the percentage for a second, then you know that at the end of that bond, it's going to be worth, at the duration of that bond, when whatever term that bond is gets to the end of that time period, it's going to be worth $505. Well, there are people that will buy a $500 face value bond for $503 because they're going to make $2 on it at the end of the term of the bond. That's the secondary market. Well, sometimes these things trade less than their face because there's better interest elsewhere. So you can lose money in a bond even though you have bought it for $500. At the end of the term, it's going to be $505. You can lose money because maybe it's trading for less than you bought it now, theoretically. If you hold it to term, you never lose money. Well, Germany just issued a bond that actually guarantees you lose money if you hold it to term. And that's the first time Germany's ever done that. I think it's the first time any economy's actually done. I'm not sure. So when they talk about negative interest rates, that's a theoretical interest rate, but still, if you hold something to term, you're going to get the positive on it. Germany just issued a bond that's going to have a negative rate attached to it. So you're going to give them $500, you're going to get $498 back at the end of it.
So maybe this is one of the reasons. I mean, money is flowing into this country in search of yield. I mean, right now the S&P 500 index is paying an average dividend of 2.15%, which is about the same as a yield on a 30-year T-bond in this country.
Mm-hmm.
Very interesting. So it's just a big chase of yield. What else? Let's see. What else? The SEC, we have to do our weekly Tesla update. For some reason, I'm just amused by Tesla all the time. So I have to do an update because the Securities and Exchange Commission has opened an investigation regarding Tesla Motors potentially breaching U.S. security laws by failing to quickly disclose that a Model S driver died watching a Harry Potter DVD with the car's autopilot engaged. So
I'm sorry, I blame the guy. I'm sorry.
I don't think you should be watching Harry Potter driving down a highway with autopilot engaged. I'm actually surprised that you I doubt he was watching it on the console in the Tesla. I guess it was another kind of device, but I guess he T-boned a 65-foot long 18-wheeled semi-truck. What's interesting to me is they actually didn't disclose it right away, but they said they just recently pulled the information off the black box. You know, they didn't know this, but they just recently pulled information off the black box, which I find very suspicious because Tesla, if they get any bad press, remember a few years ago where they had articles coming out in the winter that the battery life was not as far as they promised, and blah, blah, blah. And like they pulled the information from those reporters' cars, that they're the cars they got, like within 2 hours of the article coming out to refute it and saying, hey, blah, 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 blah. Now they're saying like this happened over like a month and a half ago, and they just pulled the data to find out what happened. They just realized it was on autopilot. I find that suspicious because Tesla's always about uncovering data.
Yeah.
So
I don't know. Does anyone else think Elon Musk looks like a slightly overweight Kermit the Frog?
I was just gonna say that same thing.
He looks just like Kermit the Frog to me.
He does. He's getting bigger.
He is. He's getting a little pudgy.
It's like his cars. They're getting bigger.
Oh boy. So what
is Valiant going to zero?
Has it gone there yet?
It's got to be pretty close.
It's at 2276.
Yeah, is Valiant going to zero?
You said it wasn't.
No, I said I was looking for a place to buy it. That place has not shown itself.
Is it going to zero, though?
The place to buy it has not shown itself.
Why did you bring up Valiant? What happened this week with Valiant? I think some fund got it. What happened?
Yeah. So Sequoia Fund, which is a very, very large multi-billion-dollar fund, finally divested itself of its Valiant position. The stock's 80% decline through June 30th badly penalized its results, so they finally dumped that out. They also said in an investor letter they took a stake in Chipotle. So those are two stocks I said I wanted to look for a place to buy. One was Valiant and one was Chipotle. So I thought it was interesting that Sequoia bought one and sold the other. I don't have any particular data about how good Sequoia does. They also bought CarMax. They bought Charles Schwab. They bought Wells Fargo. This is all in an SEC filing. I don't have particular data as to how well they do when they buy positions, if they're really good at it, what their duration is, or anything like that. But I thought it was interesting that, like, as you watch the Bill Ackmans of the world continue to defend their position in a stock like Valiant, they're starting to acquiesce, so to speak, and sell this stuff, it seems like. But they did buy Chipotle, which, you know, I've said before. We had a little Twitter conversation where I was like, Mike, I want to buy Chipotle. Look at the line outside the store. And you replied, not yet.
We've had a nice little basing pattern on a daily, you know, when we were below 400. It triggered a very aggressive short-term buy, which we've rallied up. But this is not an investment I'd take yet. We're still against the weekly rotation zone, which is a concept we use at Path Trading Partners. We could still see this go lower. I'd like to see a really nice base form on a weekly time frame, and then where we also can get beyond our rotation zone before I consider accumulating this as an investment. There's a theme again. Some of these things are tradable, but I would not invest in them yet long term.
Yeah. I don't know. I mean, I'm off the idea of buying Valiant, not because of Sequoia, but because if it takes this long. If I look at a stock and I say, you know what, I think it's the damage has been done, and you know, I think it's time to look for a place to buy it, and then that particular place doesn't show up for how many weeks ago was that, Mike? I mean, it was a while ago where I said I want to look for a place to buy it. I mean, I wouldn't even go back and look it up. We could probably look at Twitter.
We were talking about this in March 14th, March 21st. You know, so what's that? April, May, June, July. We're 4 months. 4 months in. We'll just have to see what what happens to Valiant.
Yeah.
That was a really definitive yeah.
Yeah.
Very
I don't want to buy it I mean, I'm not looking for a place to buy it anymore. It's not something that I was looking
Is there anything you are looking to buy?
Well, I did recommend to a friend /client to buy Delta earlier this week. There wasn't time to. I didn't want to buy it on Friday on the podcast, and I did send a text on, I think it was Monday or Tuesday, because it had this really sloppy double bottom that didn't really reach the level of a double bottom that we like to trade, but it also closed above the rotation zone. And I started to believe that crude oil prices were going to continue to go lower, which means jet fuel is going to continue to go lower, and the dollar's getting stronger, which helps vacationers. So I just started to look at the different airlines. I didn't like United because I just think their management is a mess. And Southwest was in too much of a sideways pattern, so I thought Delta was a good airline to get involved in. But it's kind of reached where I would have gotten out of it now. So I'm not particularly looking to buy it anymore. I'm not particularly looking to buy a dip for it. Although if we get a weekly close above its 50-day, I wouldn't mind seeing if they can break out above that congestion that's to the left of it that happened in like late May, early June. Then get above that, you might get a run up to its 200.
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann, ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
That would be something I'm looking at, but no, I'm looking to sell crude oil. On rallies, I want to sell 45.50 in crude oil.
Why would you want to do that?
So it's funny because we had a very well publicized long, I don't want to say position because we traded in and out, but a very well publicized long stance on crude oil. And now crude oil's turned, and the whole story in the move up in crude oil, essentially the second leg up in crude oil, which started in, I want to say May. Right, that second leg was driven by demand increases and by production stagnation. So there had been some outages. We had outages in Alberta, Canada. We had outages in Nigeria, and we had some weakness in Venezuela. And some of that's been cleared up. So the overseas production has kind of leveled off and is starting to increase again. U.S. production continues to fall, even though rig counts are starting to tick up. We did not get a sustained price move above 50. We got a blip above 50, and now we're back down into the mid-40s. And that is not a good enough level. That is not a good enough level for wells to, quote-unquote, come back online. It's just not. When you're looking at crude oil, you don't want to look at rig counts. You want to look at something called the frac log, which is a bunch of holes that are already drilled, ready for the production to come out of the ground. And my sources say a sustained price move above 55. So $55, and it stays there for weeks at a time. They'll start sucking oil out of those holes. But in the meantime, U.S. production keeps going lower and lower and lower. The foreign production is adding to that. But what's happening now, especially in the wake of Brexit, the only thing I'm seeing in Brexit is OPEC thinks Brexit's going to cut demand, and we're actually seeing demand kind of taper off. This week in the EIA numbers, we saw a huge draw in crude oil stocks, but we saw a huge build in distillates, so gasoline, things like that, jet fuel, things like that. The price of gasoline is going to come down for jet fuel, hence my like of Delta at the time. But when you've got that big of a log in the fuels, we're in the summer driving season. So people aren't necessarily sucking that fuel out. So the refineries are pumping, they're converting crude oil into gasoline, and the gasoline's not being used. So guess what follows after that? Crude oil stockpile builds. So we're going to have crude builds, and we're going to have gasoline builds, and we're going to have slightly lower prices. This is not the next leg down, which takes crude oil to $15. I don't believe that, because the areas that are now producing the makeup of oil that we've lost in North America are unstable political areas. Venezuela, Iran, Iraq, and to a certain degree the rest of the Middle East, and Nigeria. That's where the The fall in production in North America is being made up in those areas. And they have political unrest, and they have violence, and they have rebel groups, and they have all these things that can interrupt production in a heartbeat. So this is just a shift lower of the range, in my opinion, from about 41 to 45, as opposed to from about 50 to 55.
Well, it sounds to me like you just covered your why for the week.
That's my why.
Hey, my what for the week, you mentioned earlier, I'm going to tie this in, is you mentioned earlier the dollar is looking bullish. Well, I'm looking at a dollar index chart. And we've pulled back and tested. We have a static R zone area, which was around the 95 level, which was from the May tops. We pulled back, at end of June, beginning of July. We've tested that. We've tested it multiple times, and we've now tested the rising dynamic R zone, which is pushing it higher. If we can really get a close above about this 96.75 level, we could start the next run up in dollar.
What do you think? $1 up, $2 up, $1.50?
I'm thinking we could easily run on the next leg up. We could actually run back to the 98 level, 98.30 level pretty easily.
This is interesting, and it's a little background in what we do. When I do these TV interviews and I talk about the fundamentals, I consult Mike. We look at charts. We decide what we think is going to happen to price, and then I try and find the fundamental reason why it would happen. So still, even though I go on TV and talk about fundamentals and I'm the why guy on this podcast, still all about price action.
It's all about price action. And I think we've covered a lot of things this week, but I finally put 2 and 2 together with something, Bob.
Yeah, you did.
You want to know? I figured out why the transgender bathroom stuff was so important.
Why?
Because if you're chasing a Pokemon, now if it goes into the bathroom, you can go in any restroom you need to catch the Pokemon.
Wow, that's brilliant.
Did you see that?
That's brilliant.
I want to know who else has put that together, because that's why people will come to this podcast, because of that insight into multiple areas that I tied together seamlessly.
The next law to be passed is that you can identify as a female Pokemon player.
Bob, we do know you have a Pikachu calculator. Ladies and gentlemen in the audience, Bob has a Pikachu calculator that he keeps referring to. He knows Pokemon.
I do love the word Pikachu. I think it probably brings me back to my childhood when I would pull the covers down and go, I'm Pikachu.
I don't know where this podcast is.
Not that one either?
No.
All right, I got to go.
You got to go.
I'm still Bob Icino, and I'll talk to you guys next week.
And I'm still Mike Arnold. Talk to you guys later.